I want to take this time to ask you a question, okay? What is the thing that holds you together? What's that number one thing that holds you together as you move through your financial journey, okay, to obtain financial freedom, be in optimal shape, physicality, mentality, spirituality, faith, right? What's that thing that holds you together? Because when you can hone in on that and really focus, oh boy, are we going to achieve some results that are unimaginable, okay? So I'd like to try and answer this question as to what is that thing that holds you together, okay? And there's a video that I watched, and I'll put the link in the description, and I'll have a card up as well where you can check it out, all right? And I want to just share something with you that you may or may not have ever heard of, okay? All right, and it's called laminin, 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 okay? The definition of it is a fibrous protein present in the basal lamina of the epithela. What does that mean? I don't know. There's a video. It can explain it a lot better. But let's break it down a little bit more. So it's a cell adhesion molecule, okay? It's a protein network foundation, okay? It's a foundation inside of you, okay? Protein. It's a network, so it has different, purposes, right, and different functions. It also provides a foundation for most of your cells and organs, okay? And when you look at laminin under a microscope, who would know that the design of it is actually in the shape of a cross, kind of like the cross Jesus died on, okay? So it's pretty profound that I'd like you to do some more research on as to the thing, this cell adhesion molecule that literally, scientifically holds you together. It's called laminin. So I'd like to give that to you. I thought that might be pretty cool to know as we dive into this example right here. And the consistency of this channel, okay? The thing that holds me together, okay, is Jesus, all right? Whether you know him or not, whether you believe in him or not, it is okay. Okay, this is a non-judgmental channel, all right? We are trying to solve for our personal finances to get us to the next level. That is what we are solving for, okay? So let's take a look at this example here. All right, so pull out your notes, new sheet of paper. If you've been doing what I said, you know that I want you to get a notebook just like this, composition, real simple. Half the book is going to be on velocity banking scenarios, getting out of debt. The other half is going to be scenarios on creating wealth, securing a legacy for the family, or maybe a hybrid where it's like we paying off debt, and I can talk a little bit on what I would do when it comes to securing wealth, leaving a legacy behind. Okay? So, here are the numbers. 34-year-old individual, male, firefighter. That's what he does. Out of Toronto area, so shout out to Toronto. Thank you guys for filling out forms. I have a few others. Not a lot, but a couple. Okay, not like Texas. Texas is... It's like every other day I get another Texas person. I'm like, okay, man, I like it. I like it. So, income, $7,000 a month combined. This is husband and wife. So, some people are filling out forms as husband and wife. Okay, I like it. I love it. All right. Our, let's see, expenses are roughly 5 grand. All right. Debt, quite a bit. Over 400,000. We'll just keep it at that. Over 400,000. Cash flow is 2,000 a month. Okay. Like, pretty confident with that number. Pretty solid. This gentleman is already, has cash on hand, has reserves. Okay. Very business oriented. Love it. So there's not much work I got to do on this guy in a sense. It's just a matter of applying the strategy and he's off to the races. Okay. Now, he already acquired his debt weapon and he got a 10,000 line of credit, 9.5%. All right. And now we just got to solve for what debt are we going to hit first and what chunks. What is going to be our chunk amount? So for this scenario, when I'm dealing with someone that has high cash flow, okay, starting right out the gate, 2,000 a month, and he can actually have more because he has other, streams of income that he can work on. He knows, right? So we have a credit card, $3,700, and we have a car that we owe $18,000 on. Okay, so the first thing I'm going to do is I'm going to wipe out that credit card for $3,700, and then the rest of my chunk is going to go towards the car. The way I figured that one out is I just did 2/3 of the line of credit. Be safe, right? 2/3, so $6,600 chunk. And as you can see, boom, we wipe out this credit card. I get an increased cash flow of $80 immediately. I make a chunk over here on the car. I satisfy the month's payment, so that's cash flow of $320. That's just going to go right back into the line of credit. It's going to take him 3 months. So by the end of this year, 2018, this line of credit will get zeroed out. Okay, like really, really quickly because his cash flow is there to support that as well as his income, 7 grand. Okay, so we're dumping literally more than what we chunked at. Right? So in actuality, he's not putting in all his income. He's just putting in the amount that we took out after the month of October. He puts it right back in, takes out what he needs for expenses, does it right over again. Okay? It's going to take him less than a year to pay off the car, right? Because then we're going to move into the next chunk that we make is going to be $7,800, okay? And that would, no, it's going to be $7,550, right? Because when we split up the 66, 37 went here, 2,900 went towards the car, 320 of the 2,900 went towards the payment for that month, and then the rest towards principal. Brings the balance down. 3 more months, he's paying the payment, right? 320, 320, 320. Okay, we're in January now, and we're gonna make a $7,550 chunk towards the car. However long it takes to zero out the line of credit from then, okay, 4 or 5 months, right? 3 or 4. There's gonna be more payments that's gonna solve for. And the car will be paid off by between July and September of 2019. Gone, right? Meanwhile, we still got, cash flow from other areas. For this particular situation, this gentleman has investment property. He's got a side business in construction. He's also a firefighter. Wife works, right? There's a good flow of income coming in. It's just a matter of how we're managing that income to make sure we're not wasting all the money, right? So let's say car's paid off by 2019, next year, between July and September. Our new chunk is going to be $9,900, But at that time, I'm going to increase the line of credit to 15. Okay? So I'm going to go ahead and I'm going to increase this to 15. Right? And then my new chunk amount will be 9,900. I could even increase it to 20. It really doesn't matter. Whatever the bank wants to give me. Cool. Right? Now, he's got two options. He has a HELOC for $155,000. He also has the mortgage for $377,000. Okay? My opinion, I'm going to tackle the HELOC because for his situation, this HELOC is an investment property. Okay? And it's near university. So his thought process is, all right, I'm going to invest in this property here, get some rental income going, probably rent it out for a year, right? Or no more than 2. Sell the thing, wipe out the whole debt itself, right? Have my profit, okay? That profit can go towards eliminating the mortgage itself on his own home, right? But what's also nice is that the value of his home, according to him, he said it nearly doubled, okay? So that's pretty cool. Now we've got a lot of equity to work with here that we can flip, okay? And that's velocity banking on the real estate side. Okay, so notice how we're not even talking about how to pay off the debt. We're more so how do we leverage the debt, right? Because it wouldn't be too wise for me to try to do velocity banking on this mortgage here or even this HELOC if I can just sell the whole thing outright or rent it out, have the rent just pay the thing and let me stack my cash. I can start building that up to, I don't know. I've got 3 options here that I look at all the time. My reserves, my cash value, my cash flow. Okay? So let's see, on the timeline, let's say we're in the middle towards the end of 2020. And this HELOC got wiped out because it either got sold, property got sold, or he's getting rental income from it that offsets all the costs. So it's like nothing, right? And he's got a profit from it. He's cash flowing, right? Each and every month. That means we now have a new cash flow, 530, that we no longer are paying on it. You know, if the whole thing got wiped out. So that's 530 times 12. That's over $6,000. We paid off the car or the credit card and the car. That's $400 cash flow. Times that by 12, that's $4,800. The initial $2,000 of cash flow times 12, that's $24,000. Okay? Now, if his home doubles in values and he wants to sell it, collect the profit, cool. He gets rid of that $2,100. Okay? No longer paying on that. That's cash flow. 21 times 12, that's over 25,000. Okay, we got some real numbers here to work with. And mind you, he's probably 36 turning 37 at the time now. According to the timeline. 36, 37, damn near wiped out about over 400,000 because he strategically took advantage of not only velocity banking to pay off the car and the credit card, but also to do velocity banking in real estate, okay, to make that happen and start flipping that, okay? So there's really not much on my part that I need to do. This guy has really got it going, right? It's just a matter of where does he want to focus his time, right? So we was having a wonderful conversation together late at night after the kids were put to sleep and the wife is sleeping. It's just me and him. We're talking numbers. We're talking faith. We're talking Bible, scripture. I'm loving it. Time's flying. It's like almost 11 o'clock. And he's like, we got down to the real, got down into the dirt, so to speak, of what we're going to do for the rest of our lives. And he's like, listen, ministry, helping people, serving people, saving people. I'm like, he's speaking my fantasy language, speaking it. We're on the same frequency. Love it. So, 4 or 5 years out from now, probably 37, 38, and I'm a little older, probably 25, 26 at the time, that's when we really can collaborate and have some real dramatic experiences with people and really just helping a lot of people, not only with their personal finances, but just everything else, household relationships, it's just, there's so much. So going back to the foundation part for his personal finances, the only thing I would say is, whatever the amount of cash flow we have, let's take 50% of that and stuff it, store it, tax-free, put it away. That fulfills the law in terms of leaving a legacy behind for your children's children, an inheritance, right? The other 50% he can invest in himself, acquire more properties little by little, a lot by a lot, however fast he wants to go. Cool. He's got reserves. Anything goes down, okay? We got reserves sitting in an account that is very liquid, not something that locks my money up like a CD or bond, treasury, or mutual fund. No, I want that money very, very liquid, okay? A checking and a savings, right? Or an insurance policy, okay? And there's a few others vehicles out there, I'll learn them, but we want something that's very liquid, even if it's like cash literally under the mattress. Cool. All right. And we got our 3 things right here. So I'm happy. I don't know about you, but I'm happy. Right? And I really encourage you to ponder on that question I asked in the beginning. What holds you together? Because when you can answer that, it is going to really narrow your focus more and more every single day. No one's going to misinform you when it comes to your money, your perspective, your philosophy, your faith. None of it is going to get, altered, right? It's not going to get, you're not going to receive a different doctrine and mess you all up in that sense. So, that being said, my name's Denzel. Hope you enjoyed. Quick little velocity banking on the debt side, on the real estate side. Tune in. Got more videos coming. We are on a debt rampage payoff this week. All right. And shout out to all my loyal subscribers. Shout out to all the people that filled out forms. I love you. Have a great day.